Welcome to Zombie Advisor with James Knapp, the only podcast where being undead isn't an excuse for being unresponsive. This is the space where financial advisors and clients come together to break free from the old, slow-moving reactionary system. Tune in as we shake the dust off of outdated practices, dissect what really matters to today's clients, and tap into the brains of industry leaders who are actually alive, alert, and crushing it.
All right, welcome to Zombie Advisor, powered by Boyum Wealth Architects. Today is Monday, May 11th, 2026. The weather in sunny Bloomington, Minnesota, 61 degrees. And on this day in history, on May 11th, the worst day was actually in 2021 when the Dow Jones Industrial Average dropped by 680 points. Today, we have a special guest, Jeatran, with Marsh McLennan Agency. Jake is a third-generation insurance agent. He graduated from St. John's University in Minnesota. He primarily works with mid to large manufacturing and distribution companies, loves his wife and child with one on the way, and he's an avid outdoorsman. Welcome to the show, Jake.
Thanks, James. Thanks for having me.
Yeah, this is great. So we know that you're third generation, but how did you actually get into insurance?
It's a great question. I've been surrounded by it growing up. My father, grandfather started out of Menominee, Wisconsin with a small personal lines, small business shop. And, seeing that grow, growing up in my childhood and my father starting his own firm with his college roommate, I think there was a sense of supporting people, helping them navigate risk, balancing work-life balance, and finding ways to give back to the community. And I looked at that growing up and thought, I don't want to get into this industry. It's not the space for me. Let's try to get out and try something different. And did that, worked for other Minnesota companies, through, a decade or two back, and ultimately decided this was a great career to build into. It's a lot of opportunity with, data and AI and technology coming in. It's more tech focused as you kind of look at that in the financial institution space, and been ever happy ever since. I've been in the industry for 15 years now, and both on commercial carrier brokerage side, and it's been awesome.
That's cool. And I see that you're an underwriter or have been in underwriting before. So you actually
Sure.
worked on that side of the business too, not only just facing, but also working behind the scenes.
Correct. Yeah. So I first started as a graduate at St. John's, over 15 plus years ago. I started with a carrier called Hanover Insurance Group, been around for almost 200 years, out of Worcester, Massachusetts. So I started actually in Howell, Michigan, underwriting, smaller businesses, personal lines underwriting, and really understanding how do you evaluate risk? How do you look at things, not just what's on the box, but the operator, the family living there, what are the actual exposures? And, that kind of grew into underwriting middle market companies, think 50 million, $100 million companies.
Sure.
And what does a total loss look like? What is the vulnerabilities that keep their businesses afloat, and where they are looking at now, but also 5-10 years out, what should they be evaluated to? So I kind of took that technical grit and navigating how the carriers operate and brought to the broker side, and try to educate clients of how do you work with carriers? How do you build those relationships with underwriters too? Because I think it helps create, breaks down walls of, hey, how do we bring everyone together to have a better partnership outlook?
Yeah, it's cool. Like most people don't really think about that stuff when they think about risk management, having a relationship with the underwriter. This is Zombie Advisor podcast. We're talking about zombies here. That's what separates you from probably a lot of other people, is that you have both sides of the table that you've worked on and understand both sides for the client's behalf, right?
Correct. Yeah. I'd say, especially as you get into, larger corporations, insurance isn't dealt as a line item on your P&L. It is looked at, hey, total cost of risk. How do we control the risk, mitigate, and continue to drive that cost down as you're trying to improve margins and look at other areas, if it's, opportunity expense, CapEx to put back in the company, or look at M&A. This is the one area that a lot of sophisticated buyers start looking at, and they are looking at, not a vendor to work with, but a partner. And I think getting, both the broker, but also the carrier involved helps share the story. A lot of the companies I work with are, second, third, fourth gen manufacturers, distribution companies, and
Right.
they are, hey, we've got a great foundation. We've grown organically. We're very community and people centric cultures. And, most underwriters, if they're seeing that sent from a traditional agent or broker, might not understand that. To get the story shared, and how do you understand the buying notion of the buyer, of the client as well, is huge. So I think it's been one of my favorite parts of my job, I would say.
It's fascinating. The more that insurance is what everybody needs. They might not want to pay for it.
Yeah.
And it's risk mitigation. What do they retain? And what do they outsource? And then how do they outsource that? Right? Because it's towers of insurance now, right?
Yep. Correct.
The first is their retention. And then we have to find whatever we're going to do. If it's a manufacturer and they have some warranty claims, it might be in that. Could be in retention of employees. It could be in health insurance. It could be, and then there's the buildings themselves. The people get hurt all the time, right? So there's some of that. Cyber crime. Like we could hit all the. You kind of go through the whole thing.
You're speaking my language. Yeah, I was going to say, yeah, you're very versed in it, James. It's constantly evolving. I think as you look at the world of insurance, and you look at even a decade ago with the evolution of cyber insurance, I think that's a great way to start. When you started seeing claims of Fortune 100 space companies in the retail environment that were hit with 7-8 figure claims in ransomware, and personal information being hacked, and the evolution of this product really starting to grow and develop, and now where it's evolving on social engineering, ransomware, even AI, and how's that covered, and best practices too. I think there's a lot that continues to change it. I'm nerding out on insurance, but there's a lot of disruption that's coming into play too, with data, and how do we perceive risk? How do we look at past rate trends? If it's, to your point, catastrophic events like hurricanes, wildfires for property exposure, or you look at the auto market where there's a lot of third-party litigation funding for wrongful lawsuits, and how do you find this balance, and what's the outlook going forward too?
Yeah, for sure. Tyler went to JP Morgan last week, and they had a speaker on AI, and JP Morgan spent $20 billion on AI protection and cybercrime protection over the last, I think it was 10 years, Jamie Dimon said. And they are actually using one of the newest tools out there to see if they can break it, and they broke it right away. And so he's a little nerded out on that as well. But it's just, and nobody really thinks about insurance. It's an expense on your P&L when you're a business owner. But if you don't have the right coverage, you could think that you're covered and you're not. Do you have an example of that where you came into something and you did your underwriting and you looked at it and said, you're actually not covered for what you think you are?
It's we're actually going through this right now in a process of even just simple definition of, how the company is defined, if it's an LLC versus incorporated, and what's reflected on the policies too. Where, it's a client that has a top co that has 3 or 4 different subsidiaries and other ownership structures. And, that was the first thing we found, which was pretty straightforward, that, the policies weren't following the actual legal name of the organization. I think things like that, which just digging in, doing the due diligence to understand, but also, where I'm finding a lot of in the manufacturing space, say, depending on the breakout of sales and your finished good client. So if you're building component parts, and if you're dependent on, 1 or 2 clients that make more than 50% of your revenue, having lines of, contingent business income or dependent business income. So if those clients go down, that revenue source is still covered in that situation too. So I think depending on where you look, there's something to find on a 10,000-foot view looking down, but there's always a continuation on it too, to say, hey, how else do we solve in covering risk? Do they pay it, from a self-insured lens? Do we put a policy? Do we look at taking higher self-insured retention limits, so they're self-insuring to a certain limit, like workers' comp would be, or general liability auto too, for larger corporations? So, and then you get captives too, when you get to larger, looking at, if it's sharing from a group captive, working with other like-minded business owners, or a single parent captive for, tax derivatives, more rainy day funds.
Yeah.
Hold up. Just a quick pause in the zombie action. You're listening to Zombie Advisor, and I'm so pumped you're here. Got a question? Want to challenge something I said? Head over to boyumwa.com or hit the show notes to find me. Don't be shy. I'm not actually undead.
Insurance is actually a IRS code, right? So it's
Yep.
what's the code number again?
So a single parent captive is 531B,
Right.
and then group captive, I'm not quite sure off the top of my mind. So I think it's been very prevalent in recent years, where historically would be, through Cayman or Bermuda, where these captives were set up. And it was a tax derivative state where it was more proficient to have offshore. But up until recent political landscapes, the tax burden wasn't as stressed, I would say. So more onshore captives, meaning that they were established in the United States and less restrictions. And, I think taking a step back, group captives solve a need for companies solving for workers' comp, general liability, auto, and umbrella. So your casualty spend. So everything but property and executive lines. And it is in a way of risk sharing with other businesses too. So you invest in here, you have a captive model, and after year 3 to 4, you have a dividend structure that's paid out too, depending on good performance and profitability.
Yeah, managing the risk with other captives, right? So the money can come back to you, meaning you're actually becoming an insurance carrier, so to speak.
That is exactly it. Right. So both models prevent, the disruption of carriers coming into a marketplace, pulling out from profitability issues.
Right.
So you pick the carrier, you pick the TPA for the claim standpoint and, the billing standpoint, and it's kind of an a la carte, which is kind of nice to have, both on single parent and group captive structures.
Absolutely. So one of the things, we have classes every week. We do Stump the Chump, and then I do an alpha class. We actually did alpha class this week, where we have a person that's selling a business. And I said that insurance carrier actually is one of the teammates that you need to bring in early on, especially if you're selling or buying another business. Why would I bring you in earlier?
Yeah, especially we'll tackle the buying side first. So they're buying someone else, depending on the operations, what's their goal, how do they want to dissolve the company. I had a call this morning similarly where the client was going through an M&A, and it was a bolster on kind of a tip under to their current operation. So similar space, similar clients, similar operations. But we've had others in the past where if it is manufacturer and they're buying more of a construction related industry, how do we silo that correctly? More or less to get the carrier involved so they understand what they're getting into. But, does it mix well together, or should we keep this separate, two different program structures? So a lot of times we come in and kind of evaluate, hey, is there any, gap analysis here? Do the limits make sense? What else can we help provide before bringing it into our portfolio for the client? And, a lot of that, it's more just making sure the comfortability and it's not disrupting the total cost or risk. So now flipping to the, selling side, I'd say a lot of times we're looking at, tail coverage, especially from a D&O perspective for directors and officers. Usually it's a 6-year tail, you pay the premium up front, and that protects the D's and O's if any type of litigation would arise or wrongful disclosure would come into play, and that would protect them both from their corporate investment, but also their personal assets too, which is side A coverage.
Yeah, exactly. We talked about D&O insurance, directors and officers insurance, and why that's important. If I sold my business and you came back after me and you sued me because I didn't disclose something to you, that would be a problem for me and for you, right? As the buyer. And so it's time, and there's a lot of things that get involved in that. We're looking at insurance from a whole different perspective today because we're using AI now.
Yep.
I mean, our listeners don't really understand what that means in the world when we talk about insurance, right? So walk me through that. I'm a mid-sized manufacturer, and I need to go through. You're looking at gap insurance. I'm just talking to you for the first time. What's the process?
Yeah, I think I'll tackle them in two different areas. I think AI is obviously becoming a huge disruptor, both good and kind of bad in certain situations, depending on how it's utilized. We're utilizing it, more or less internally from efficiencies, but also for, coverage gap analysis in certain lines of business for clients. So making sure, exclusions aren't on the policies that where we don't want them,
Mhm.
and we have our coverages that are proprietary where we want to have them. But also on the carrier side too, they're getting better at how do we understand. And I think as you look at both the broker and the carrier model, it is understanding there's going to be this larger attrition in our workplace. And how do we right size the industry so that we can fill these talent gaps, get more efficient, but help make everyone's lives a little bit easier too. And I think that carries in from, underwriting to billing to claims on a carrier side to equally on the broker side from a service model to certificates to billing. That's where I think it's going to get exciting to see. But where it's interesting to see right now is you take a lot of this and take personal lines, insurance, private client, your homeowners, your auto and umbrella, and you could put this in the chat or Claude or Perplexity, any of the models, and say, hey, go find me insurance for this house and at this price point, most competitive. And it'll be interesting to see what the accuracy of it is and the longevity too. It's, where I kind of bucket it in the insured tech space, where you have a lot of these startup model tech hub insurance carriers getting very niche focused, and a lot of them are doing really well in certain areas. But how do they enable AI? How do they get more sophisticated on what they're, evaluating risk, but also, we don't want to see new entrants come in and leave within a certain time frame. So hopefully that helped answer a little bit.
It did. I mean, disruption is good and bad, is basically what you're saying.
Yes, I encourage it. I think AI is going to have a play in our space. I mean, we are, I think you have to be the early adopters to get into this environment, understand, but using best practices too. And I think for
Mhm.
me, it's educating clients on, whether if they're shopping their insurance on AI, that's one thing, but also like as a business owner, how are they using it within their, network systems and proprietary information, just so that they're covered and making sure the policies that we have in place are sufficient to cover them too.
Absolutely. Well, even having contracts with vendors, and how that contract's being read by AI.
Yep.
You know, there's going to be legal disruption, there's tax disruption. There's just going to be a lot of disruption kind of everywhere.
Disruption and efficiencies. I think, everyone's, scared of where job replacement's going to come into play.
Sure.
And rightfully so. I think it's hitting at it's not going to change 180 overnight. I think there's going to be this trend of 5-10 years. And how do we use this and adapt? And it's going to create easier job performance, more effective performance. It's just going to change the job description though of, hey, how do you work with your insurance broker, your CPA, your lawyer, and where's the value come in there too? I think at the end of the day, people still strive for individual interrelationships. So meeting in person, having those conversations. I think we looked at this a couple of years ago and several years back, but on smaller businesses, especially in personal lines where we have online quoting platforms and direct to carrier quoting. And it has a play. It definitely does, I think, but still as the businesses evolve and become more larger, more sophisticated, you need advocacy to get there. And online and AI is not going to solve the need.
No, it's not. And also, customer service is still going to be number one, right?
Yeah.
Are you there to answer your phone? Do you understand what your customers' needs are? Can you think for them that they don't really understand because you're an underwriter, they're not?
Mm-hmm.
I'm not going to take your brain away from you because you put 15 years into it. I'm going to try and think like what our clients need, but we bring you in because you're the expert.
Yep.
We all have our own role here. And the reality of the situation, I think, is that AI is going to enable us to separate the great from the really great. And I think you're just going to see better customer service coming out of those that are already good at it.
Yeah. And how they can use it, and how do you become more of a tech developer versus,
Right.
a customer service rep or someone of that nature, I think too.
Yeah, I do too. I think it's going to be a great thing. I think the industry, the evolution of this industry, as we have retirements, right? You talked a little bit about that. The age of your business and the age of my business are both very old. Not that there's
Very
anything wrong with
desirable
that.
industries.
Yes.
Yeah.
But people hang around for a long time because you get to work with your brain. You don't have to work with your body. It's a relationship driven thing. So these are clients that they've had for a long time, sometimes friends at this point. So it enables you to hang around for a very long period of time. Now that baby boomer workforce is retiring, there's not as many people getting into this industry, or the barrier to entry is really hard sometimes because you have to go get clients, right? So
there definitely is this talent gap, and I think it's a good point I wrote down of, how do you get young grads and people interested in, if it's wealth management, if it's insurance, it's challenging just to say, hey, don't put us in the bucket of the direct writers. You see the, ads on, the State Farms, and they're great, and Liberty Mutuals, but there's a lot in this space, and it was fun. I was actually out in Philadelphia last week at Risk World, which is kind of I call it our insurance Super Bowl. It's every large Fortune 500 company meeting with carriers, meeting with brokers, and I got to mentor 10 students from University of St. Thomas, and they've got a risk management program we've been helping them co-develop with other, brokers and carriers in the Twin Cities. And it's like, why insurance? And how do they find interest? And I think there's this great verdict of, there's opportunity for career growth, but also the amount of data and tech decisions coming into play too. It's much more savvy than, hey, it's my golfing buddy of 30 years. I'm with that broker. It's like we're making more sophisticated decisions based on data-based, information coming in, which is cool.
It's super cool. I mean, it's the decision making using the data, so you have outcome-based solutions.
Yep.
That's a different way to say it, right? So I have the information, so we can run the risk model to actually understand what our risks are going to be.
Exactly. Yeah.
Right?
You do the same thing on wealth management. You're looking at hey, what's the balance of the portfolio, and how do we make tweaks, and where's the vulnerabilities too?
Yeah. What's the Monte Carlo simulation look like when we get done with it? Thank you again, Jake. This is awesome for joining us and sharing your insights. Thank you again for taking the time to listen today.
Absolutely.
We truly appreciate all of our listeners. If you enjoyed this episode, be sure to follow us on YouTube. Subscribe anywhere you listen to podcasts so you never miss a future conversation. We'll see you all next time on Zombie Advisor. Thanks, Jake.
Awesome. Thank you.
That was awesome.
Thanks for listening to the Zombie Advisor with James Knapp. Don't forget to hit that follow button so you never miss an episode. Want to learn more? Visit us at boyumwa.com, BOYUMWA.com, or give us a call at 651-289-6444. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Boyum Wealth Architects. The content has been made available for informational and educational purposes only and is not intended as a substitute for professional investing advice. Always consult your financial advisor or other qualified service providers with any questions you may have regarding your personal investment planning.